watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi as well as Ajay Sharma. And for now, the market is holding into the green, but there's a lot of volatility that we had to deal with throughout the trading session. On the screen, you have the Nifty, which is up around 100 points. The broader market's clearly outperforming. But it's the markets which are volatile on account of expiry today. So you're seeing that extra amount of volatility and the moves between the red and the green. But the Bank Nifty is also quite jittery today. Tomorrow, remember, is the outcome of the RBI Monetary Policy Committee meeting. So ahead of that, the street is a bit nervous and not perhaps wanting to take big positions. Of course, there's no rate cut expectation as such, but the commentary from the governor will be fairly important. You also have the broader markets which are doing quite well. In fact, the mid-cap index was up almost 2% the last time I saw. The advanced decline ratio is quite favorable, and that tells you the vibrancy in the market. FMCG today seeing a bit of a profit booking, so right from an HUL to a Dabur to a lot of other companies are coming under pressure. While the laggards of Monday and Tuesday, which were the defense and the PSUs, they are seeing a big comeback today. So defense names like HAL, BHEL, Cochin Shipyard, Muscat, PFC REC of the world, these are the pockets which are actually substantially in the green. But India VIX has cooled off for what it is worth. It's down almost 10%. It's below the level of 18 now. But let's see. I don't think it's set in as yet with respect to the political kind of updates that keep coming in. So the market keeps reacting to that. But I think one thing the consensus seems to be like NDA is surely coming back as 3.0.
Actually, the numbers are improving, right? Last night onwards, the numbers are now improving. And as the government is taking shape, I think the market is, kind of coming to terms with the fact that this is the new shape and structure of the government. At the day's high, we are above the 22,900 mark. And the lowest day before yesterday was closer to about 1,000 points lower. So we have recovered quite a lot. What is interesting is that actually VIX gapped down on opening and consumers sold off opening and thus not recovered. This is a clear sign that risk on is back in the market. Anisha spoke about how the mid caps end of the market, small caps are doing very well. The breadth has come back, which is a clear sentiment that the retail HNI population of the traders are feeling much more comfortable acting in the market right now. So that's the market for you. A lot of infra names, PSUs, all of that. So it's a vibrant market with a good mix, barring, of course, consumers, which is taking, but not liquor. That party continues. Out of the consumer
That party
pack.
clearly continues, and the party on D Street as well is back. I don't
Party
think
we're chalegi.
Totally. I don't think we're too far away from actually making up from Tuesday's losses as well. A large chunk of the recovery was made yesterday, and if you just look at not the index but outside the index, I mean, look what's happening with the BHEL. I recall that on Tuesday, this was the one stock which was getting hammered. It's up 12% right now. Of course, there's news flow as well backing the stock. They received a very sizable 3,500 crore rupee order from Adani Power. NBCC is higher by about 6%. Working orders worth about 491 odd crore rupees in the kitty for them. Century Textiles up 12%. There's a JV to develop luxury residential projects in Gurugram with a revenue potential of about 5,000 odd crore rupees. So that stock is holding up double digits right now. Look at city gas distribution companies. After that city note coming in, they're very constructive on the Indian gas sector. That entire pack is propelling up. GAIL, IGL, MGL, and GAIL also, mind you, was one of the beaten down names from Tuesday. Z, of course, the board has now approved that 2,000 crore rupee fundraise via shares. So that stock as well has been very, very buoyant. Still very speculative, one would say. For the last 2 days, it's been running up, and today as well, it's higher by about 5%.
So what actually happened was that the market was expecting some details out of it. What happened was they just declared that the board is okay if the company goes ahead and raises capital of 2,000 crore. No shape or contour of that fundraise details have come in. And the stock topped out at 7% gain and is now at 5% and losing ground. So again, but that itself is something management has been on record saying that they are also keen to participate in infusing capital. Let's see. But off highs sharply after the announcement of 2,000 crore. But details were lacking.
Absolutely. Look at HAL, 6.5% higher there as well. REC has made a jump up of 6.5%. IRCTC is back. So the entire concern around the PSUs per se, that you can see some stability come back in at least that segment. And of course, the large caps continue to hold out. SBI has made another 3.5% in today's trading session. Adani names holding out, L&T higher by 2.5%. And technology has made a very strong comeback today. So HCL Technologies, TechM, Infosys, all those stocks sitting with gains of anywhere between about almost 3 to 4% now on HCL Technologies. But Kunal, durable this move, you think? Because the index per se is not holding up. It's individual stocks which are still, holding on to the steam.
Yeah, I think so. It's almost as per the expected and anticipated lines. In the morning, we were discussing that how the index should be into a range. We hit, I think we managed to hit 22,900 or 910 on the Nifty spot, and from there we've managed to come back to a slight profit booking mode. I would not say a correction. I think again the market is trying to just redefine a range for itself. Earlier, as I said, in the morning also, that 21,000, 24,000 was the big broad range for the index just prior to the elections, as well as one day on post the elections. But now I think that's gotten narrowed significantly to just about a 500-point range. So which means 2,500 as a support and 23,000 as a resistance for the index.
All right, let's move on. Kunal, stay with us. Aditya Agarwal and Sandeep Sabharwal also joining us on the show. Sandeep, afternoon. Sandeep, how have you been observing the way markets are coming to terms, and as governments is taking shape, market is also taking shape and has come back from the depths of that, kind of a capitulative move coming to terms? What are your observations? Market has moved on from that event now?
Yeah, so I think if someone just slept through the event and then came back to the markets today, they would have seen that nothing much happened. Like some stocks have obviously gone up and down, but then that's part of the market volatility. In my view, it was always the case that if the same government continues irrespective of the majority, like it shouldn't be 272 is the majority and they just have 275. So with independent support, etc., if they are at 300 plus, I think it's safe because the other side then just has 240. So you need to come back, focus on the fundamentals again, and try to look at companies and stocks which are at valuation at which you would like to buy them.
Sandeep, you were pretty vocal about the fact that Tuesday perhaps was a ripe day to actually buy into some of the stocks or add positions as well. So where is it that you found opportunity in Tuesday?
The first focus was to get into the large cap ones which were beaten down. So stocks like L&T, some auto stocks, something like an ICICI, Bharti Airtel, etc., where I think the bounce back could be faster. So some consumer names, etc., like Dabur, etc., we had got in earlier, so that they in any case rallied. So we didn't buy at this point of time, but we are still holding on, expecting a revival in consumer demand due to good monsoons, then ebbing inflation, and hopefully some friendly tax policies going into the budget.
Sandeep, now that, that entire fear psychosis of the market that just because there's not a strong majority coming in, the reform momentum which slowed down is getting reversed. What are your thoughts on the shape of cabinet to come? There is talk that, perhaps the government may want to retain strategic areas of focus, kind of ministries, defense, home, finance, etc., external affairs, but may be open on giving away, say, rural development, Ministry of Telecom, all of that. Railways also kind of, since RJD has a history of managing railway portfolio. Any thoughts there?
Yeah, so I think railways is critical because there significant investments were going on and the direction of the current railway minister was very good. If there's a change in helm there, I think that could be somewhat disruptive, although directionally the upgradation of the railway stations, upgradation of flights, etc., upgradation of the trains, etc., will continue in my view. It could slow down. So I think that's one risk. So that's something we need to observe who comes in out there. Defense, obviously, I think the core party BJP should retain, and if that happens, we shouldn't see much disruption. So I think the only key thing is in all the portfolios you talked of is railways, and I think that's something which will need to be keenly watched.
Aditya Agarwal is also with us. Aditya, what are your screen telling you about potential trades in this market?
Good afternoon, Ajay. Thanks for the show. So as far as trades are concerned, obviously I'll go with the long side because clearly markets do seem that they have buying interest and will remain like that markets. So I've got a couple of buy recommendations. One is Cholamandalam Finance for a target of 1450 with a stop loss at 1290 on the downside. I'll go long here. The second is from Granules India. That also looks very interesting to me on the chart setup as we speak. It's trading at day's high. Can be bought at current levels for a target of 495 with a stop loss at 445 on the downside. Overall, if I talk about index, I think especially Nifty will remain range bound. We are done with that volatile phase and up moves and down moves unless we see any negative surprise coming ahead, which markets are already not priced in. I don't think so markets will see any more volatile moves anymore. And VIX, I think so, would have also topped out at levels of 32. You will see a gradual recovery in the market and a range-bound move. Maybe 23,000 on the upside will continue to act as a hurdle. On the downside, 22,700, 22,600 will act as a good support area on the markets. So overall, I think Ajay, markets will remain range-bound, and within that, you will have pockets continue to outperform. Few sectors and stocks will continue to outperform. IT is something that I would like to bet big on, apart from the rest of the sectors which are buzzing, because this is something which has not been spoken about much, and there are a lot of stocks which have been underperforming in this space. So I think today's move that we are seeing in the IT is likely to continue next week as well, and one should clearly focus on some of the large cap and mid cap IT names.
Yeah, absolutely. IT this morning had a bit of a bear versus bull moment because JM Financial at one hand was saying that it's time to go overweight, whereas there were other brokerage houses saying that it's not yet time because Jefferies believes that the margins will be under pressure for the IT companies. But real estate as a pack has been fairly active today, whether it's Century Textiles or a Brigade Enterprises, which is up 10%. Sobha is up 8%. Lodha Enterprises is up. So all of these stocks are actually doing quite well. Kunal, what should one do? Should they use these rise to probably profit book or time to buy still?
From the real estate pack, I think there are still few names which are attractive. Godrej Properties, for example, I think is still good for potentially another 200 to 300 points on the upside. I would look out for, say, 2,900, 3,000 as a potential target range for Godrej Properties. DLF somehow has, I think, gone through a bit of a correction over the last 2-3 months. The stock, I think, topped out at 930 plus mark. Very recently, the stock had broken below the 800 levels. So I think it's now just about fluctuating just about that 800 mark. Still trading marginally above the 200 moving average. But then looking at the relative weakness for the stock in the last 2-3 months, I would expect DLF to probably go into this drag kind of a mode for some more time. So maybe that stock can underperform. Sobha, on the other hand, looks attractive. I think that stock has been trending up quite well over the last 6 to 8 months. Still, I think looks good for at least another 200 points on the upside. So 2,150 approximately could be a near-term target range. And one of the other mid-cap names, the non-FNO stock from the pack is Anantraj Industries, which I've been bullish on.
Developers, Anantraj Industries, plethora of names from within that realty pack. We're going to take a very quick break on that note. When we come back, we're going to continue our discussion with our chartist as well as Sandeep Sabharwal. But here at market veteran Madhusudan Kela today, he's betting big on liquor stocks, and he believes that this particular sector is a long-term structural play on India. Here at why he believes so.
There is no reason why liquor industry will not be as vibrant in India as it is there in China. We have more people as compared with China now, younger population who will look to consume liquor once our per capita income increases. We have seen in lot of other sectors, in lot of other places that this liquor consumption has increased, and hence there has been birth of many valuable companies. I've been investor in Radico for a long time. You have seen what a fabulous journey this company has had in last 17-18 years. They were selling whiskey at 500 rupees a bottle. Now they sold, the same company has sold a whiskey at 5 lakh rupees a bottle. Right? They sold 400 cases few months back at 5 lakh rupees a bottle. And the brand is globally recognized now. If you are able to build a brand, then you make serious money in this sector, and that is what is being proven by Pernod Ricard, by Diageo worldwide. If you look at their brand, they are selling one bottle of 750 grams at 25,000, 30,000, 40,000 rupees.
The point is that the broader market has come back. Look at that. Nifty is in range. Pull the small cap and mid cap. The fear in the market that it's time to get out and all of that appears to be reversing, and that's why 3% higher what the small cap index is at. I want to talk about some of the wires and cable stocks which did not participate when RR Kabel and Polycab of the world. In fact, on valuation front, Finolex Cable, pull up that one. It's a late boomer, but it's doing very well lately, and the commentary from the management suggests that they are aiming at regaining lost ground in the form of margin, etc. Sandeep, any thoughts on Finolex? Do you track this name or this space? Anything which you have in your portfolio?
Yeah, so we don't have any of the wire and cable stocks, but I think Finolex have tracked, and recently, prior to the results and subsequent to management commentary, obviously it's done very well. So the entire space is doing well in terms of volume growth, and it has actually been leading the entire growth trajectory in the consumer durable side in a way. But I think if you look at valuations overall, most of these stocks now trade between 60 to 80 kind of like 50 to 80 kind of price earning ratio, which I think is excessive for a wire and cable business.
There's also a lot of concern, especially, since the election verdict, about what's going to be the future of PSU companies. Now, on one hand, we all know that that's where the froth was, and some of them were, quoting at peak valuations, which they continue to do so post the recovery that we've seen after Tuesday. While nothing may actually change for the growth path of the companies, do you think they could perhaps go in for either a price-wise or a time-wise correction? And in that lieu, does it really make sense to take some profits off the table if you're not looking at a very long-term horizon, but a short to medium term?
That's for me,
I would
Aisha.
say yeah.
Sandeep, yes.
Yes, I would say yes to all of the points you made. So nothing much changes for the growth paradigm of these companies. Valuations were excessive, continue to be excessive. Many of the stocks trade at sort of double the valuations at which they should ideally be trading at. So there is a case for both time-wise as well as value-wise correction. And I would think that given the huge over ownership of these stocks at this point of time, where all retail investor portfolios are full of these stocks, so we could see that happening over the next few months.
The other set of stocks which are actually making life highs right now, and this is after that turbulence that we have seen at the start of the week. You have the auto stocks right up there, and auto anchs, Minda Corp, you have Exide Industries, Escorts, TVS Motors, Bajaj Auto. All of these stocks are sitting at life high levels, which they're making right now, an up move of anywhere between 3 to 13% on these names. Aditya, what within this auto sector would you want to buy right now?
To be honest, because there are pockets which have already outperformed, and then there are pockets which have underperformed. So we are seeing a bit of a catch-up here, and then especially in the auto ancillary names is where I think you can see a bulk of the catch-up. So could be like a name like a Polo Tire, I think so. Makes a good buy at current levels, offers a good risk to reward. You spoke of Uno Minda. That is also looking interesting to me on the setup, though it's up some 13-14%, but I think there is still some room on the upside. It can see levels of 1,050 to about 1,100 on the upside. Talking of Polo Tires, it can test levels about 500, about 520. And also look at a two-wheeler space and then commercial space, maybe Aisha Motors, I think so, can be looked at if somebody is looking at within the auto space. If I have to pick, I'll probably go for a two-wheeler like a Hero MotoCorp and Aisha Motors. There I see more room on the upside. So Aisha Motor can test levels of 5,000 on the upside. Hero Moto on the upside can see another 10% pop. So something like a 6,500 is what I'm eyeing on Hero Moto.
Look at how NAM India is locked on an upper circuit. Now, you, well, of course, manage money for a living, and you've been part of the asset management industry for the longest time. How are the business dynamics of asset management industry taking shape? On the one hand, volumes in flows, etc., are strong, but aren't margins coming under pressure, and a lot of investor interest going towards wealth managers, etc.? Sandeep?
So both things are happening, Ajay. So on one side, what so since SEBI took the foot off the pedal in terms of restricting the fees of asset managers and continuously trying to reduce fees, charges, etc. I think from that point of time, the asset management stocks actually turned around a year or so back, and after that, they've been moving up sharply. The beauty of the asset management business and any wealth management business, as all of us know, is their costs tend to be more or less free. So incremental assets which you add simply go into your bottom line, and that explains the significant increase in profitability we've seen for many of these companies. So my guess is that these stocks will continue to do reasonably well. Valuations were very cheap year 12 to 15 months back. I think where, if I remember rightly, HDFC AMC bottomed out at 1500 odd levels, and from there it's been a sharp up move. So valuations are a bit stretched at this point of time, but the direction of growth is going to remain good. So I think these will be typically those category of stocks where you can see steady earnings unless and until we see a sharp bear market hitting us, where then the cyclicality will come in.
Sandeep, yesterday the view was it's going to be all about rural recovery and FMCG is the space to be. HUL had shot up the maximum we had seen in 4 to 10 years. The valuations were comfortable. Right now itself, a few minutes ago, you're running the lines that the monsoon is progressing well. In fact, in the next 3 to 4 days, it's likely to hit Maharashtra. It's progressing well over Karnataka. Today, you have the opportunity to buy because some of the stocks have cooled off. Would you be a buyer on FMCG and especially staples?
Yes, consumer stocks are underowned at this point of time. They have not given any returns for the last 4-5 years. Leave aside something like a Godrej Consumer or a Tata Consumer, which have been outliers, and some stocks like Titan and all, which have their own dynamics. But overall, I think on the FMCG staple side, there is opportunity, because as volume growth comes back, we will see that they could start surprising on earnings over the next few quarters, and once that happens, the stocks will also move. So because they are so underowned, that's why as ownership increases, we'll see steady up move. So these are stocks which will not give you 40-50% return suddenly, but these are steady return stocks, and at these levels of the market where valuations are not really cheap, they do offer a reasonable amount of comfort.
There's a very important bit of news coming in from New Delhi. And Sandeep, I would urge you to listen to this because we'll need a reaction from you. The fear of the market was that the pace of reforms from here on may slow down, or even select reforms may be backtracked as and when if allies have some problems around it. So the entire steering of reforms from here on, the steering wheel, Mr. Modi was sitting on it up till now. Somebody else may actually start guiding that direction. But now, in Modi 3.0, how things are taking shape, my colleague Prakash Pridarshi joins us exclusively with details on what are the early talks which have happened between the allies and Prime Minister Modi recently, especially to do with the vision of the Prime Minister from here on, including the reform direction. Prakash, tell us. Very important.
Yeah, the key economic reforms are likely to be dated under the coalition government, as all India allies have extended their support to the BJP and Prime Minister Modi to form the next government. Along with that, India partners have supported PM Modi's vision to make India developed by the year 2047. In addition to that, Telugu Desam Party, which is one of the biggest allies under NDA, is in favor of next generation reforms to create new opportunities for the consumer and the industry. Along with that, what we are also learning from our sources in the power corridors, that the key economic reforms such as amendments in IBC Act, along with that reforms related to capital and digital public infrastructure to taken forward. The ambitious labor reforms, which has already been approved by the parliament, they are yet to be implemented, to be taken forward with slight amendments. Sources are also indicating that the Modi government 3.0 to continue with the increased capital expenditure target to boost economic growth going forward. Along with that, mega rate rationalization under GST, which has already been supported by the state government, will be taken forward without any hurdle. Along with that, government to continue with modest disinvestment target, and the value generation in PSUs will be the focus. The sources are also indicating that the energy transition goals will be taken forward with the pre-decided target, and that is likely to be on top of the agenda of the next government. Last but not the least, the sources are indicating that the manufacturing growth through PLI schemes to be continued, with most sectors on radar. Back to you.
Input coming in, this will clearly calm down a lot of frayed nerves in the market. In fact, earlier in the day, we even spoke to Madhu Kela, a veteran market investor, regarding this, and Madhu also was expressing that allies such as TDP, the biggest ally, Chandrababu Naidu himself is a very reform-oriented man and has displayed it even in his previous version as a chief minister. And it is unlikely that the pedal on reform may be backtracked. And this is exactly what my colleague is bringing in. Let's hear out what Madhu had to say in the morning about it.
That they are not dependent on a particular party to have a simple majority of 272, right? So and plus all the NDA allies have also confirmed their strong support for the formation of the government. So I see really no issue politically for the next 5 years, and I firmly believe Mr. Modi will continue to run this country. So that's the first point, right? The second point, for people like me, is business as usual. Basically, we are back to basics. This couple of days of excitement, volatility is past us. So market is as what it is today. And if you look at the market, they have already crossed, there was hardly 2-3% decline on a closing basis as compared with pre-survey market which was being made. But there was just too much panic which was being made, and more specifically, I think the technical side, because it was all positioned for a different outcome, and specifically the momentum stocks, that's where this couple of days of nervousness was there. But I see from here on, I will reiterate, as I've spoken many times in the past, that this is the place to be in. There is a lot of opportunities here in the next 3, 5, 10-year time frame. This is the time to think of wealth creation rather than income generation, right? The other point which I see, there will be a lot of doubts in people's mind that whether the coalition government will be less effective, whether they will have to dilute their agenda. So the only place where I feel that there could be some dilution in agenda might be social reforms, like what we were talking, one state, one election, common civil code. I don't know how those things pan out. We will know over the next course of next few months how those things pan out. I see no real deviation on economic agenda from a India perspective. If at all, I think it will get even accelerated more. If you look at even a track record of someone like Chandrababu Naidu, he has been absolutely pro-development and he has been absolutely pro-economic growth. So I see no reason why there will be any dilution in the economic agenda of this government, and hence there is no reason to believe that there should be any change in on our stand on the overall India story and the growth prospect of India.
Okay, it's about the India story and the overall growth prospect. And Sandeep, you heard, of course, my colleague Prakash, as well as what Mr. Madhu Kela had to say. What's your view with respect to this entire conundrum that people are facing right now? Will there be a reset or course correction in NDA 3.0, or is it going to be just further push to what we have seen in the second regime?
It's very important to understand that when people talk of reforms, what reforms are they talking of? What exactly do they mean by reforms? So many of these reforms which they talk of have no financial or economic implications. Most of the financial economic reforms can be easily carried out with a simple majority and do not need any changes to the constitution. So I think this entire assertion about reforms being deferred, etc., is ridiculous. I don't believe that. And I think that the key is to see whether the entire investment cycle which has started on defense, railways, power, etc., which continues, which it should, and what the government does to revive personal consumption, which is the most important facet which is missing in the economic growth today.
Sandeep, always good to have you on the show and get in your thoughts in the markets and, of course, various stocks and sectors. In the meantime, let me get some closing ideas as well from both our experts. Kunal, what's on your list?
So I've outlined Biocon as an interesting bet. The stock breaking past about the 325 major hurdle, and also I think this indicates that the stock has converted itself into a more of a monthly breakout from being into a more of a sluggish daily, weekly breakout. So looks very attractive, and the price volume supporting the move for Biocon today.
Right. Aditya, what's on your stock list?
I'll go for a TCS. It looks very strong to me, and it's on the verge of a breakout from a downward sloping trend line. My sense is as the day approaches, it will break out. Look for a target of 4,000 on the upside with a stop loss at 37.50 on the downside. I think this offers a good risk to reward trade as far as IT space is concerned.
Okay, let's head into a very quick break. Just half an hour to go before we wind up for the day. Holding up a good 178 points, up in the green, 22,800 back on the ticker. It's a little choppy, but that's okay. We're still very well in the green, and of course, individual stocks holding out very smartly. Take a break, be right back. Back with closing trades right here on 80 now. The index is a little wobbly, but we're now attempting a scale up. So back above a good 200 points, up in the green right now. That's a 1% move that you're seeing on the Nifty futures. But a lot of individual stocks which are holding out, and Ansh is here with the entire list of all the volume buzzers in trade.
Right, so VA Tech Vaibhav will be the first stock in focus, as the stock has actually given a breakout from its horizontal resistance zone with volume of over 3 times its average volume of last 10 sessions. In addition to that, the stock has also touched record high level. Apart from this, Avanti Feeds will also be in focus, as the stock has actually given a breakout from its downward sloping trend line. Also, it has given a breakout from its double bottom chart pattern as well, with volume of over 7 times its average volume of last 10 session, indicating very strong participation in today's breakout. Century Textile will also be in focus, as the stock has given a breakout from its downward sloping resistance trend line, which was intact for around 7 to 8 sessions, with volume of over 4 times its 10 session average, and it has also registered its biggest single session gain in over 2 years. Also, the stock is moving on the back of a news. Actually, the company's subsidiary has signed a JV to construct a residential project which has a potential revenue of around 5,000 crore. Lastly, Manappuram Finance will be in focus, as the stock has not only given a breakout from its downward sloping resistance, but it has also given a breakout from its 20 DMA where it was taking resistance. So keep an eye on these stocks.
Point taken. We'll watch out for that as far as the market goes and which are the stocks which are buzzing around on heavy price volume. But yes, in terms of the markets right now, there has been a sizable up move in the last few minutes itself. Let's take stock of which are the big contributors on the upside, because Infosys is adding almost 40 points to the upside. SBI is up almost 3.5%, contributing almost 25 points. L&T, TCS, Reliance, all of these heavyweights are definitely performing for the bulls today. But within the IT pack, Kunal, wanted your take. We spoke with Aditya about it, but what about your top bets within IT?
So I think HCL Tech is one of the better names so far. Looks attractive at current levels. Wipro is something which I think at 455, 460 mark. Also, I think is some distance away from its 200 DMA, but I believe that the stock could make a very strong comeback for itself. Tech Mahindra, I think, has been one of the stronger names in terms of the relative price performance, because that stock, I think, is just 2% or 1.5% away from its previous swing highs around the 1325, 1330 mark for Tech Mahindra. So I think a lot of stocks which are looking attractive. From the mid cap end or the tier names, in the sense, I would probably pick OFSS. That's Oracle Finance. That's a stock which I think is heading towards a double bottom breakout around the 7,950, 8,000 mark the last I had seen. So I think that's another attractive name, but again more high beta, and probably one has to look out for a trailing stop loss of maybe closer to 7,750 with a potential target of 8,500 also for OFSS.
Right, okay, those are some of the bright picks across the IT pack. What continues to also look good is BHEL, that's up a good 9.5%. There's HAL, which is perked up 7%. REC, a 7% move there. GAIL has been very strong, about a 6% traction. And outside of the PSU pack, there's Biocon, which has also sprung up a good 7.25% as we speak right now. Aditya, the entire pharma pack as well began its move much before the election verdict, or for that matter, the exit polls. What's looking strongest on the charts right now to you?
There are a couple of names, Aisha. The one that you spoke of, Biocon, that definitely looks very strong. Just as a disclaimer, this is one stock which has been recommended to our clients as well. This is one stock which definitely stands out, and I think so there is room on the upside. One can still look at adding fresh positions despite the fact that it's up 8.5%. I think stock can easily test levels of 450 to 350 to about 360 on the upside, with a good support on the downside at 320 to about 315 odd levels. The second stock on my radar will be an Aurobindo Pharma. This is one stock which is yet to see a massive up move, despite the fact that it has broken out from its resistance. It just popped out in trade yesterday. Today it's a little weak on the charts. But I think so it's a good time to look at that stock. So with a good support at 1230, 1220, one should definitely look at adding Aurobindo Pharma as well for a target of 1500 on the upside. Apart from that, there are a bunch of names which stands out. Like I think one can also look at Wockhardt Pharma, that is also popping out. So Wockhardt Pharma can be bought at current levels. I think a good move to 650 levels is can be seen on Wockhardt Pharma with a support at 520 on the downside.
Point taken. So those are the top bets within the pharma pack. But the latest news coming in on ITC, wherein the demerger has been approved by the shareholders for the hotel business. 99.6% of the shareholders have actually approved it. So all that flip-flop which was there around ITC, whether the demerger will be approved or not, has been put to rest now. It's gone ahead and got the shareholder approval. It is something that the management has been fairly positive about, saying that this is something that will create value over a period of time. And for now, the stock is reacting positively. It's up around 1% in the trading session. Apart from that, which are the other stocks which have managed to scale up in the last few minutes? You do have Suzlon Energy, Nippon Life AMC, Brigade Enterprises further catching on, and then Biocon, the stock that we were just discussing, is also higher. Star Cement has taken a sudden knock, and so is the case with Bandhan as well, I believe. In the last few minutes, some of these stocks have come under pressure. So Star Cement is off the highest point but trading in the green, and let's pull up Bandhan Bank as well and see what's that up to. Kunal, what's your view on Sun TV and Honasa Consumer? Both of those stocks are coming under pressure right now.
So Sun TV, I'll be very bullish on. I think especially after today's downtick of 2% broadly from 740 odd levels to 710, 715 where the stock had made an intraday low. I think I would be very bullish on the stock at current levels. Now there are 2 points over here. One, of course, on the weekly monthly charts where the stock has confirmed a major bullish engulfing breakout for itself. And the second is, till yesterday, the futures were also almost at a 15 to 20 points discount. So I think closer to 760 was the spot yesterday, and the futures was almost at 740 mark. That discount has narrowed today for Sun TV. So that could probably be an indication that maybe the extreme end of the selling could probably have been behind to the stock price. So I think this 2% odd dip should be taken as a good buying opportunity for Sun TV. Honasa, Consumer, on the other hand, that's a stock which is still trading into a range. There are no major signs of a breakout. The stock is still struggling to break past about the previous resistance around the 465 mark. This was the 3-day as well as the 4-day swing high for the stock price. So would wait out for a breakout above 465 to initiate a fresh buy.
Okay, let's get you a sense of what's happening across dealing rooms as well. Sharad joins in with all the dealing room chatter this afternoon. Sharad?
Well, yes, in focus is Endurance Tech, which is an auto ancillary company, and what we are gathering from dealers is this buying is coming from certain domestic institutions. Of course, last week itself, PMS has also actually added stake in the company. Interestingly, the stock is up more than 10% over the last 2 trading sessions, and even the volumes have picked up. The key DIs already invested in the company includes the name of SBI Mutual Fund as well as Nippon India Mutual Fund. Now, from June 11 to June 14, the company will be meeting important FIs in Singapore and Hong Kong as well. And as per our channel checks, company is expected to receive a large order coming in from the Europe markets. Now, do remember these orders are generally high margin orders, and interestingly for the auto ancillary pack as a whole, the two-wheeler component segment that is supposed to be in focus as the entire focus shifts on populism, and because of that, Rural recovery is also in focus, and that's why the OEMs are also demanding a higher components coming in from the two-wheeler segment as well. So the focus is on endurance tech and certain auto ancillaries where some basket buying is coming across the counters.
Okay, point taken. So that's the latest coming in on endurance tech. But time now to take the BTST ideas from our technical experts. Aditya, what's on your BTST or STBT list?
I'll go for a BTST. I'll look for McDowell's. Looks very interesting. As we speak, stock has recovered from its intraday low. Looks like it's heading higher, almost at the high point of the day. At current levels, I would be a fresh buyer in the stock with a stop loss at 1270 on the downside. And I look for a target of at least 1350 on the upside. So 1350 is your target on the downside. 1280, 1270 is your stop loss.
Okay, point taken. But since we are talking about the Alcobev industry and the fact that you're positive on McDowell's, let me take it across and listen into the soundbite of what Ms. Madhukela had to say about the liquor industry, because that's clearly, kind of getting a lot of fillip in India, and now a lot of these brands are actually making its foothold in the global markets as well.
There is no reason why liquor industry will not be as vibrant in India as it is there in China. We have more people as compared with China now, younger population, who will look to consume liquor once our per capita income increases. We have seen in lot of other sectors, in lot of other places that this liquor consumption has increased, and hence there has been birth of many valuable companies. I've been invested in Radico for a long time. You have seen what a fabulous journey this company has had in last 17, 18 years. They were selling whiskey at 500 rupees a bottle. Now they sold, the same company has sold a whiskey at 5 lakh rupees a bottle. Right? They sold 400 cases few months back at 5 lakh rupees a bottle. And the brand is globally recognized now. If you are able to build a brand, then you make serious money in this sector, and that is what is being proven by Pernod Ricard, by Diageo worldwide. If you look at their brand, they are selling one bottle of 750 grams at 25,000, 30,000, 40,000 rupees.
Okay, that's the take coming in on some of the liquor segment, or rather the liquor segment, and why it would continue to be a long-term story. Let's mark a couple of losers as well from today, and much unlike yesterday when Hindalco did see that mammoth pull back, irrespective of the Novelis IPO in the US getting pushed, Hindalco today is down. Unilever as well has seen some weakness coming in after 2 days of a big move. Hero MotoCorp, Asian Paints, Nestle, all the movers from yesterday are the ones which are taking a bit of a breather today. Kunal, considering Unilever was one of your top picks, would you recommend buying into the weakness today?
Not really, but yesterday we were discussing this, Isha, that I think at 8% uptick, you can't expect the stock to keep on moving up hard, and it would be a very good time to try and book profits over there. So I think from those 2600, 2650 odd mark, the stock has naturally gone to a correction around the 2550 mark. My only sense is that maybe the stock could get into a drag further. So I think maybe the price wise level could be attractive for HUL, for some traders who are looking to buy HUL. But I think in terms of the time wise, I would probably believe that the stock may go into a drag further. So I believe in case over the next, say, 1 week, the stock comes back to 2500 mark or sub 2500 levels, that could be a better price point as well as a time point for entry point for HUL.
Okay, so that's a view coming in on HUL, but Mayuresh Joshi also joins us on the show. Mayuresh, what are you doing with the defense stocks, if any, right now? What will be the recommendation? Book out profits or keep holding them on?
Afternoon, Anisha. No, I think the entire element in terms of the structural story for the defense space still looks good, because the order books are very much evident in terms of giving revenue visibility over the next 4 to 5 years. Obviously, they have been executing well so far as well. So I think the only risk that probably happens with a lot of these companies is whether they falter in their execution in a few of the quarters going forward. And that might pull down forward multiples if 1 or 2 quarters are not up to the mark. However, even from a valuation standpoint, I think they are not too expensive, not too cheap. So they are lying somewhere in the middle. But tailwinds and structural story still lies intact for these stocks. However, I think from a Marketsmith India perspective, we are very, very light right now. We'll still like to see over the next couple of days of what transpires on the political front. And therefore, the initiatives that will be taken over the next few days, and specifically in the budget in terms of allocations, are going to be extremely critical. So again, I think any pullbacks becomes opportunities very specifically on these stocks. Anybody holding probably at lower levels can continue holding, but you should have your risk management practices in place. If your moving averages are getting breached, the nearest moving ones with extremely heavy volumes, there is no harm in booking out on at least partially in some of these names.
Right. Mayuresh, hi, afternoon. Just wanted to understand, where is it that you're positioned when it comes to IT? Today it's a mover, but do you think there is any material trigger on ground per se for investors to look at any of the IT names?
Afternoon, Ayesha. So again, I think if you look at large cap and mid cap has done phenomenally well over the last few quarters. Again, in the quarter gone by, results were stunning for a few mid cap companies. The expectations in terms of US dollar growth, constant currency growth was good. They had decent margins that they reported. Order books were decent as well. And the management sound very, very confident and optimistic on all these parameters put forth. Now, if one really expects the US economy to stay where it is, and the reports that we get from our weekly interactions with our US team, is that the US economy is doing reasonably well. So to that extent, any rate cut, one in the best case scenario, two would be very, very optimistic. But if these rate cuts start coming through, BFSI, retail, manufacturing will benefit. And therefore, I think order books should start coming back. There is a huge scope in terms of AI, generative AI, cloud computing, data centers as we speak. And therefore, I think our company should benefit over the next 2 to 3 years if one really has that kind of a view. So I think we are keeping our watch list ready for this sector. At this juncture, I think large caps probably look a better bet, both in terms of the placement as well as valuations. And therefore, stocks like Infosys, HCL Tech is something that we are keeping on our watch list. But again, Aisha, I think we'll wait out for the next few days, maybe the next week as well, to see how things settle down, at least on the political front.
Wait for the next week, perhaps the things will settle down. But as you talked about, one of the big events to watch for is, of course, the RBI Monetary Policy Committee meeting, which is underway right now. The verdict will be out tomorrow on that. Let me take it across to Snehi to get a sense as to what the expectations are, and then perhaps we can get Samiran as well as Tanvi to listen into what their views on the expectations are.
Well, yes, so the street is largely expecting that the MPC will be maintaining the repo rate to the levels that it is at right now. Then we're expecting no change in those levels as of now. The stance, however, is expected to remain at status quo. So the key factor to watch out over here is, will the withdrawal of accommodation stance change to a neutral this time around? That's going to be a key point to watch out for. Rate pause is expected to continue. Overall stance is expected to soften as well. Now, when you take a look at India's GDP trend, then quarter 4 FY23 we were at 6.1%, quarter 4 FY24 latest figures at 7.8%. Some good growth is being seen on the GDP front as well. GST collections are also looking largely stable. India's inflection trajectory is the one main metric to watch out for, because in June of 2023 we were at 4.8. We've reached levels as high as 7.4 in July of 2023, and as of now the latest inflation figures for April 2024 have tempered substantially to 4.83%, which means that the RBI's rate actions and everything that they have been doing so far in terms of policy moves has been working out. So now all eyes will be on the on the RBI and the MPC outcome to see what the next step is going ahead. Experts say that stance change is likely in the August meeting, and this will be followed by a cut in the October meeting. This is what experts have to say, and rates are expected to stay elevated till inflation is above 4%. We're at 4.83%. The RBI targets to bring that down to 4% in the near future. Now, rate cuts will the rate cuts be delayed? And here are some key reasons to believe that this might be the case, because like I mentioned, GDP is resilient. There is momentum in domestic demand as of now, and focus is on the inflation target. This is as per experts, which also suggests that the RBI may not have to meddle with the rates as of now. And all eyes will be on RBI commentary, what they have to say in terms of GDP growth and trajectory, the forecast on inflation, the liquidity measures and increase in the rupee volumes, and lastly, if there is any strategy change on the forex front. So, well, yes, all eyes will be on this very crucial MPC meet.
This combination of growth and inflation is probably telling them to stay on guard. On top of it, given that there is now some uncertainty on the fiscal outcome, they might want to see through it. They want to see through the monsoon situation as well before they can embark on the easing process. This is a policy where the NBC should be focusing more on risk minimization. There are some risks emerging, particularly on fiscal, bit of political uncertainty. In these kind of times, it's better to not rock the boat by doing major changes. So in that sense, the change of stance could more be an August policy discussion rather than in June.
Most of the focus will be retained. A lot of focus will be on the upcoming budget and the policy henceforth.
The focus maybe of the government could change on certain other sectors, social spending. How do you see that in terms of the policy then moving forward? Any change that we could expect?
Clearly, I think the political outcome was suggesting that there is kind of a weak sentiment at the lower end of the income pyramid. And, whether we accept it or not, but India has seen a K-shaped consumption recovery post the pandemic. So most of the high frequency data that we track are clearly indicating that affluent premium segment demand in India has been doing well, but demand for entry level mass market goods has remained muted. So maybe it is hinting you at some point that the income levels at the bottom end of the pyramid, which I think were the most affected, their income levels have not gained to the level where they start spending again. So I would say from a policy choice perspective, which I think will be one of the biggest focus for investors, will be whether the government, while adhering to the fiscal consolidation roadmap.
Okay, that's a whole bunch of views coming in, and of course the ET Now poll as to what economists and bankers are saying. What is it that we can anticipate from the MPC outcome tomorrow? But let's just look at some of the other buzzers. BHEL, of course, we've been flagging off, has been a big mover today on that order win, a sizable one at that, one of which is from Adani Power. IEX as well, the total monthly volumes have seen an uptick of about 29%. This has also been a big mover, although it's definitely come off from the top of the day. But Mayuresh, did you recommend buying Tuesday's fall in the market? And if so, what were the top names on your shopping list?
No, I think we were a little cautious. And again, I think, Aisha, as I have pointed out, I think what we ideally like now to see that over the next day or two, if the market stabilizes from the lows that we had made on Tuesday, we will get into a rally attempt, a phase that we term in markets within as a good phase to start making your watch list. And therefore, I think as I put forth, I think in the next few days, if everything is sound on the political front, it seems to be sound on the political front, and the data points in the market are suggesting that we'll create a watch list. I think the watch list will primarily be among the domestic cyclicals itself. So cement would be a big theme as we see it. Stocks like Ultratech, as an example, would remain part of our watch list. BFSI would be a very, very interesting space as well. So top names like ICICI Bank within the private teams will definitely form part of our watch list. A few of the consumer discretionary stocks as well, because with good monsoons expected this time round, I think the second half in terms of an earnings trajectory should be equally good as well. So I think we'll just keep our fingers crossed over the next 3 to 4 days. I think if everything works well on all these counts and the market does not breach the lows made on Tuesday, I think this watch list may be put into an action.
Point taken, Mayuresh. On that note, we'll let you go, Aditya as well as Kunal. Thanks so much for making time and staying with us today. But time now to take it across to Vinny for seeing how the market close really pans out today.
Absolutely. So today seems like a bit of a seesaw kind of a day, right? We saw it go up and down. 22,600 was the lowest point for the Nifty and 22,900 was the highest point, but managing to close somewhere between, more towards the 22,900 mark. So 22,857 levels is what the Nifty will be closing at. Gains of 1%, similar gains for the Sensex as well. Broader markets, let's pull that up, what the mid cap and the small cap is doing, because that was outperforming the benchmark indices, and that is clearly what is happening at the end of the day. Mid and small cap managing to perform well. We had a lot of stocks, so keep an eye out on ITC because the hotel demerger has been approved by the shareholder. When you look at it in terms of the approval, 99.6% of the shareholders had approved ITC's demerger. Z, the fundraising that we were keeping an eye out on, they've raised 2,000 crores. On the back of that, we've seen a run-up coming in for Z Entertainment as well. Other than that, all those PSU names were buzzing in trade. So let's pull up something like an REC, PFC, GAIL, all of them managing to hold on to strong gains. SAIL also coming in over there, managing to hold on to strong gains today, and that was from the PSU pack. We had top sectoral gainer today, the Nifty Realty, Media, PSU Banks also making the list there, all managing to hold on to good gains, while today we had the FMCG pack, which was a bit subdued in trade. And whether the names, whether you look like at a Britannia or even a HUL, Nestle, Dabur, Marico, all of them a bit under pressure in the FMCG pack. Not much of an excitement today after a couple of days of gain that we saw coming for the FMCG pack. But all in all, we had seen good gains from the realty names. So whether you look at it, whether it's a Brigade Enterprise, DLF, Godrej Properties, all of them managed to see good gains. And that's how we'll be closing the day. Nifty closing with gains of almost 1%.